Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action, the trading setup and the market strategies you need to follow for the day. Remember, it's also the weekly expiry options for the options of Nifty. This is the second time ever after the rules have changed that the Nifty is looking at an expiry on Tuesday. Now remember what happened yesterday is that the Nifty 50 is actually not declining as much of late but also is not managing a decisive move on the higher side as well. Every attempt to reclaim the resistance band of 24,850 to 25,000 is actually getting sold into, and Monday was also a similar story. The only positive is that the index is managing higher highs and higher lows on the charts, which generally is a positive sign. Today also, like I said, it's the weekly expiry of the NSE contracts. Of course, the volatility aspect will be there. We'll have to note that too. Auto stocks, which have continued to do the heavy lifting, will again be in focus today. IT stocks will also be in focus today after Infosys has announced that it will be considering a buyback of shares along with its results next month. So that's going to be an important one to look at as well. Now we are also looking at a whole host of stocks sectors like autos. Experts are looking at a re-rating. Morgan Stanley believes that the GST rate rationalization could actually reduce the prices of the cars never seen before by consumers at large in India, and that's going to lead up to a lot of re-rating into the auto stock. So that's going to be clearly in focus again in trade today. What's really happened on the global front? We've seen overnight Wall Street indices close higher with the Nasdaq Composite hitting a new record high amid the rally in the tech stocks. We've seen at close that Dow Jones was up by about 0.25% and the Nasdaq also was up by about 0.45% as well. The S&P 500 0.2% higher. Now, investors in the US are actually hoping that Federal Reserve will actually cut rates in the next week's policy. The FMC meeting is going to take place on September 17. Now, what's happened on the commodity front? Keep an eye out on, apart from equities, gold and silver. Remember, gold's rally has extended beyond the $3,600 a level for the first time on the international platform. Now, when we look at even silver prices, that's also not far behind, and that's going to be a clear focus as well. What's happening in the Asia markets after overnight positive cues? Well, they've been trading mixed in the morning trading session. We've seen mainland China index down by slightly 0.1% lower in trade. Hong Kong was up by about 0.3% in trade. We've also seen South Korea's Kospi up by about 0.5% in trade as well. And we'll also look at the Nikkei that's up by 0.2% as well. Remember, Japan's Nikkei has been looking at a record high level, notching second straight day of gains after the country's Prime Minister Shigeru Ishiba has announced resignation on Sunday as well. Now, let's also look at the gift Nifty trends that are indicating a higher start at 24,956 odd level. So let's see how things shape up back home. Let's also welcome our guest on board. We have Kush Kodasar now joining in to share with us his views on the markets. Hi, warm welcome to you, Kush. Good morning to you. Help us understand on this expiry, what's your strategy going to be on the markets?
Morning, Sakshi. Definitely, markets are going to be volatile as it has been since last few months, in fact. But I believe yet my view will be the same, which I have been narrating that sell on rise on Nifty with stop loss of 25250. Uh, because whatever positive news are flowing in the market, still we are not able to breach that barrier. I mean, GST was announcement happened, then GST bill got passed. Still we are not able to cross over 25250. So I think still there is something in the market, maybe global factors. 25250, unless we are breaching on the upside, I will hold on to my shorts, which I have been recommending since 25,000. So still we are in the money if any viewers have taken any position. So definitely my view for intraday is also either sit on sidelines or sell.
Sit on the sidelines or sell. How about the auto space that has been garnering a lot of traction of late? Are you positive on that? Is that a safe haven of sorts in the current setup in the market?
So definitely, auto sector has seen a good momentum in last 2 weeks. But I will be stock specific on the auto sector. Something like TVS and M&M, they have seen a good momentum. So technically, in a shorter time frame, they are into overbought zone. But something like Tata Motors is on my watch list. I think breaking above 730 Tata Motors will give a fresh breakout, because since last 4 to 5 months, Tata Motors is not able to cross over 730. So if at all you want to buy fresh on auto sector, 730 is my trigger point for Tata Motors. Stop loss would be around 710 after beyond that point. and target would be around 820 for next 4 to 5 months. So don't be much aggressive in auto sector from current levels, but play safe.
Okay, got that. Let me also just ask you, especially when we look at the market move in the pre-open trick, there's a 400 point of a tick on the higher end. Let's hope that this stays true. 25,000 we've already got on the Nifty, but I think this will settle down soon. 24,949. That's the level at which the Nifty is trading at, 168 points higher in trade. So that's something that you could definitely be looking at. Let's also look at some of the other aspects that we will be looking at. Of course, auto space will be clearly in focus. I'm also going to be looking at Infosys. I think, Kush, I would want to discuss with you with respect to Infosys. How are you looking at it? A buyback announcement yet again coming in by way of earnings announcements as well next month. So that's the clear focus. September 11th is when the board will come to talk about more details as to whether it will be open market or other routes that they will be looking at. Remember, last buyback was in 2022, 9,300 crore rupees, maximum 1850. So we'll have to look at all the contours this, and of course help us understand what will this mean for the shareholders at large. Infosys has actually been an underperformer of sorts. It's also slipped by about 20-25%, or from the highs. How are you looking at it?
Definitely, I think still IT stocks overall, Sakshi, I believe they are going to underperform the market. Yesterday also, if you look at Nifty losing streak, most of the stocks were IT or FMCG. So, and you rightly mentioned that not just Infosys. I mean, all major IT stocks like traditional IT stocks like TCS, Infosys, Tech Mahindra, HCL Tech, Wipro, they were all underperformed the market since last 2 to 3 years. Remember in 2022 Feb or March, if I'm not wrong. TCS had announced a buyback, and many people, just crazily went outside to buy stock for short term. I think ratio of buyback would be most important. So if at all you don't play for corporate actions, but definitely if you are an investor, you are getting some profits on Infosys. I think you should, I recommend to give back shares in buyback. I believe IT sector would remain in sideways to downside momentum for next 6 to 8 months. So I'm bearish on Infosys. So as an investor, I would trust if you are in making money, just apply for buyback.
Okay, fair point. I hope this has also given a lot of understanding to our viewers there. Let me then ask you on some of the other specific key stocks. I wanted to also discuss with you, Kush, the food delivery giant. Swiggy is consistently coming on top of the radar of a lot of brokerage houses. Yesterday, we had, one of the brokerage houses initiating coverage there with a target price of 550, and we have another report that's coming in today also on Swiggy. So the entire food delivery space is back into focus. Today also, I think there's an indication of a 7-10% higher start. CLSA has an outperform rating and a 509 target on this one. They believe after the conference feedback has come in that the company is maintaining its margin guidance for quick commerce business. As per the management, food delivery has 18 to 20% kind of a medium GOV growth potential and a 60 basis points annual margin expansion runway ahead of it. How are you looking at Swiggy and Zomato at this stage?
Definitely, Shakshi, these stocks are always been my favorite, and I've been recommending Eternal, I guess, since day one. I mean, I
Yes.
still believe, these two stocks should be in your portfolio. Reason is why, I mean, people talk about, startups are, at higher valuations and stuff, but these two startup, or to say particular this sector, is now not becoming a luxury. It is a necessity. It is becoming part of our everyday life. I mean, it's just like a data. I mean, yes, till until 2020, it was like a luxury. No one used to order online. But post
Yeah.
COVID, get addicted to even order. Even my mom, who is a senior citizen, is not so tech friendly. But now she orders everything on Blinkit or Swiggy, Instamart. So I think
Okay.
this is going to be a multi-bagger sector. There would be volatility, but I think Swiggy has an upside of 580 in next 3 months. Stop loss could be 410, and internal stop loss 310. Target would be 395. We are entering festive season, so next 2 months, I think sales are going to go high on both food delivery and quick e-commerce.
Okay, fair point. So positive outlook as far as the food delivery space is concerned, and kind of demand that could come in the upcoming festive season is definitely likely to push up the stocks also higher in trade. Let me also ask you on some of the other aspects. We've been talking a lot about the GST rationalization over the last 1-2 weeks odd, and we've been trying to understand what does it mean for various sectors and the opportunities that could come in. We've been talking about how auto space is the clear winner here, or emerging as so, because of the huge demand that's already pouring in by way of inquiries, walk-ins to a lot of showrooms, and of course the inventory is also there. We were talking to experts, FADA experts also talking about, of course they had their own issues of the cess and how that will be compensated, but on the demand they were also pretty bullish about this upcoming festive season. We're also hearing from a lot of brokerage houses how they are expecting that this kind of a GST rationalization could lead to, price cuts that I've never seen before, across the board, across the industry and across all the OEMs by companies, by a consumer. So we are looking at a statement by Morgan Stanley which says that the rationalization could lead to price reductions of a magnitude never seen before. It further stated that upcoming quarters demand would be further supported by the monetary easing, and secondly the 8th pay commission as well. So that's what is keeping them pretty buoyant about the auto space. If you had to choose about some stocks that you are most bullish on, which ones would those be, Kush?
So, if I believe, yes, GST rationalization has been positive for the consumers, but I believe, clear-cut beneficiary in auto sector would be tractor segment. I mean, that would be the best agricultural, vehicles would be the most effective. And I think that consumers are going to benefit the most. Uh, Definitely two-wheeler segment is also going to see the boost, but I'm a little bit skeptical because actually, on the other hand, employment is the biggest issue. I mean, if there would be a layoff and no much hiring or no hikes in the salary, I think higher vehicles, two wheelers like say Bajaj Pulsar or something like luxury bikes like Royal Enfield, they will see a hit, of course. I mean, in the growth, I mean, growth rate would be not as much as we have seen past 4 years. So something, if I have to pick just based on GST rationalization, I would focus on commercial vehicles. So for tractors, Ashok Leyland and maybe Mahindra and Mahindra. These two are my favorite focus. But Mahindra and Mahindra has already seen some good momentum in last couple of days. So maybe Ashok Leyland at current levels with the stop loss of 132. It's a low beta, but you may see 160 by March end. So I'm not much bullish on this GST rationalization because on the other side, salary and hike issue would, purchasing power in the hands of consumer is going to get lower.
Right. Kush, let me also highlight for our viewers, for Morgan Stanley, they've also come out with three, key updates on the key stocks, M&M, TVS Motors and Eicher Motors, which they believe they were already gaining market share, and price cuts could accelerate that trend as well. For Eicher Motors, Morgan Stanley has upgraded the stock to equal weight now and raised the target price to 7,200 now. On Hero, they have upgraded the stock to equal weight, target price they have raised as well to 5,968. But they have downgraded Bajaj Auto to downgraded to underweight kind of a rating and a target price of 8,075 on a relative basis, that as they believe it benefits the least from the domestic recovery when we compare across the board. So keep that in mind as well. 908, and we can actually look at the market settling in the pre-open. All the sectors are opening higher in trade. IT stocks, which were laggards yesterday, could be back into focus again. Look at the IT index, it settled about 1.5% higher in trade. Of course, led by names like Infosys. We'll also look at financial services, consumer durables, even the broader markets. Looks like it could be a positive breath across the board in the markets today. 24,864 is where the Nifty is also settled, about 90 points higher in trade. HDFC Bank is the top mover, at least in the pre-open. Nestle, Dr. Reddy's, HCL Technologies, SBI Life, these could be the stocks that could be hovering higher in trade. We'll come back once again to the markets once they open, and of course look at all the stock related action that's taking place. But let's also try and understand some of the other aspects of the consumption space, FMCG space at large. Kush, how are you looking at that? Do you think the everyday items, the home essentials that are going to see a lot of reduction is going to be beneficial with respect to a lot of volumes and sales for even the FMCG players at large? How are you looking at players like a Nestle, HUL, Britannia, maybe a Dabur, Imami as well? We have a Jeffries report also on HUL today. It has a buy rating and a target price of 3,000 as well. This is largely on the back of Unilever CEO Fernando Fernandez appointing in March 2025 and recently outlining his strategic priorities as in the investor conference, where they believe that India is standing out as a core market for the company, and they believe that not a penny will be spent apart from US and India when it comes to acquisitions as well. So that's what is keeping the stock into focus too. How are you looking at the FMCG space?
So definitely FMCG space. I mean, Sakshi, I won't go with traditional
Okay,
FMCG as a new investment. There are
okay.
practically three reasons. If you look at FMCG index, since the announcement we opened gap up, but it is the worst performing index in last six trading sessions. Why? I mean, if it was going to be so beneficial. Second thing, I know I don't understand why. If today, if I have to pay less GST, say on wafer packet of chips or maybe biscuit. I'm not going to increase my consumption. People are getting health conscious. So second reason, I think they won't see any major jump is, because people are getting health conscious. Third, I mean now rather than nationalization, local products are getting attraction, local brands. So for example, if you are in Bombay, you will prefer Cheda wafers over say Lay's in a regular day to day life. In Gujarat, maybe Balaji is the king. So that is the reason why this traditional FMCG companies, which were at one time only few of them in India, but now you have local specific which are good, which are Fasaya food and the taste are accepted by the local consumers. So now area specific FMCG companies are catching up. Even Haldiram is doing good in north. I mean in west you will not see Haldiram in every store. In north, Haldiram is the king. So I believe FMCG is not going to see a major boost of sales. They will see marginally profits in their books of accounts because of GST, but I don't think there would be major growth in sales.
Fair point. Okay, let's also welcome Arpit Beriwal, analyst for derivatives wealth management at Motilal Oswal Financial Services, to join the panel. And both Kush and Arpit can now help all of our viewers understand the key stock ideas that they have identified for all of you viewers before the markets open as well. 3 minutes to go. Good morning to you, Arpit. Good to have you with us. Let's start off with your top choice of stocks for today.
Good morning to all. So looking at the overall market breadth, yesterday we have seen good action in the across the broader market. So our two topic would be from the NBFC space. One would be AB Capital. So look at the chart setups wise, very strong on the monthly and the weekly setup. Daily a strong bullish candle range breakout. So I think definitely can head towards 310 levels. Second would be from the gold finance space, that is Manappuram Finance. So if you look at the chart setup of Manappuram Finance, very strong on the monthly setup. Daily and the weekly range breakout above 285 levels holding well. So I think slowly steadily you can see good 5 to 7% upside move going forward with a time frame of 6 to 8 days going forward for both the stocks.
Okay, Kush, what about you?
I mean strategy on Nifty.
On the key stock ideas for our viewers.
No, no, I'm just waiting. I mean,
You're just
if
waiting.
yeah, if we break 24,007 on the downside, I will sell Nifty. If we break about 25,250, I will buy Nifty. Otherwise, I'm just enjoying on the sidelines. No trade in between because one day today IT stocks are opening green since last 2 days were opening down. So triggering stoppers on the both the side is equal chances. So I'm just waiting on the sideline, waiting for Nifty to reach key levels.
Okay, waiting on the sidelines, not really jumping in, no trades for now as Kush is looking at least at this point in time. Keep an eye out on the levels that he is saying, and once those levels break, he actually believes one should also escalate their sell calls as well. Let me also just bring up a few more spaces. Okay, banks is something that we can clearly discuss. Arpit, how are you looking at the banking story? So far volatile. What's next for the banking space? What's appealing to you at this stage?
So looking at the overall banking space as a whole, if you talk about right at the start of the series, where the Bank Nifty started around 53,900, and from last 7 to 8 sessions, if you see index is still hovering between that zone itself. Bank Nifty is taking support near its 200 DEMA, but if you look at the old setup of the private banks, more or less, except SGFC, all other counters are morely lackluster with the sideways range. So I think predominantly the banking space as a whole, some underperformance is likely to continue. As of now, there is no major reversal seen on the chart wise. But within the banking, if we talk about apart from banking, NBFC is the space to look out for. As we talk about the NBFC space, likes of AB Capital, L&T FH. Muthoot Finance, Bajaj Finance. So I think NBFC's financial package is relatively looking more strong as compared to the banking core space. So I think our bets would be more on the bank financial space as compared to the banking space as a whole.
Okay. Kush, what about you? Do you think the GST rationalization news? Okay, first let's focus on the markets and then we'll come back to this discussion as well. 24,864, 91 points higher in trade on the Nifty. You can see a 0.3% move. So we've started off Tuesday and the expiry session on a positive note. There's an 86 point of a jump. We have climbed above the 24,850 mark as well. All the sectors barring auto, that's a surprise, that's holding up into the green. Remember, auto has been consistently rallying, some profit taking right at the beginning of the session. Today is being seen on the auto index. India VIX is also lower by just marginally, but rest of the sectors are all up. IT sector, like I had pointed out, will be the top gainer. It is 1.9% higher up in trade. Infosys is 3% higher, and that's the key stock to watch, at least for now. A smart rally. The stock is hovering at 1477, at least for now, as far as Infi is concerned. Let's look at Wipro, HCL Tech, Tech Mahindra. So out of the 4 top movers on the Nifty, it is the IT pack that's clearly leading the show, at least for now. Let me also look at the top drags then. Which are the stocks that are declining? Auto space. So you have M&M that's slightly down. You have Bajaj Auto that's down by over 1%. Remember, Morgan Stanley has an underweight on Bajaj Auto, and that could also be leading to some pressure there. Titan is down, Eternal, Shriram Finance, HUL. These are all the stocks that are hovering lower in trade. Autos, consumer durables, the clear 2 sectors that are seen as the winning sectors of the GST rationalization are seeing profits being taken off in trade today. Look at some of the FMCG stocks. That's also declining, 0.3% lower for HUL. And among the top laggards as well in trade today. Let me look at the PSU stocks. You have the oil related stocks, your power related stocks that are still holding up. Oil India is higher, Coal India, PFC, NMDC, NHPC and IRFC. These are some of the stocks that are holding up. Let me look at the Nifty 500 names as well. Quickly see if there is any stock that we could be marking out for our viewers here. Prime Focus is another 8.8% higher in trade. Remember, series of block deals that are taking place in trade today also, and that's really leading to a lot of buoyancy. Remember, we've seen just a couple of days ago, Mr. Ramesh Damani, Madhu Kela's fund, Utpal Sheth's fund, all of them have bought into the block deal as well. The stock has already zoomed about 21% in the last 2 days, another 8.7% rally that you are seeing in this stock again in trade today, 189. That's the kind of move that we are seeing on this one. Apart from this, auto ancillary names like Precision and Camshafts are consistently hovering higher. You have Golden Tobacco that's holding up in trade as well. So some such stocks that are holding up. Quickly coming to Arpit. How are you looking at the opening on the expiry session, Arpit, today, and what would you do?
So, Sakshi, if we talk about the Nifty first, as today is the Nifty expiry, relatively Nifty has been outperforming. Though it is trading between a range between 24,600 to 25,000 from last many days. But overall intraday, if we see, there has been momentum. And our sense is that till Nifty holds about 24,650, 24,700 levels, our bias would be positive for an upside move towards 25,000. But you have to keep one thing in mind, 25,000 is a key hurdle that we have seen on the last Thursday, that is 24,980, and that is likely to act as a major hurdle zone. So overall, you have to play this range between 24,750 to 24,950 levels for today. On the immediate basis for today's expiry view, 24,750 would be the major support zone for Nifty. Until it holds about 24,750, our bias would be positive with a cap upside towards 24,950 levels.
Fair point. I hope this has also given a lot of viewers an understanding as to how to go about the space. Kush, how would you look at the opening? And, any suggestion right at the opening of the markets? Where are you keeping your attention on?
My attention is on Bank Nifty. Sakshi, if we break yesterday's low on the futures, so I was just looking at the chart. So 54,320. If we break that level on Bank Nifty futures, I will go STBT on Bank Nifty futures. Target on the downside for tomorrow then would be around 54,000, while stop loss then would be 54,500. So keep a sell stop on Bank Nifty futures below 54,350.
Okay, fair point. Let's quickly look at some of the other spaces that are buzzing. IT pack for you, Arpit, what would you do with Infosys? A 3% rally here. Remember, the buyback news is keeping the stock in focus. What's your key strategy here?
Sakshi, if we talk about the overall IT index, the index has been a huge underperformer, and definitely today we have seen gap up opening because of the news flow that has been seen on the Infosys wise. So look at the chart setup wise, broadly Infosys is trading in a range between 1440 to 1520 levels, and today we have seen a negation of lower highs. But as we look at the setup wise, still we'll wait for confirmation, and any closing above 1500 levels will definitely change the setup of the stock. Till then, that time, our stance is that the upside is capped. So we'll be closely watching 1500 levels to watch out for. Between that, it is likely to consolidate between 1440 to 1500 levels.
Okay, fair point. I hope this has also given you a lot of understanding there as to how to go about the space and the stocks in that space as well. Let me also look at some more drags. FMCG is now slipping and some metal stocks are also dragging in trade, at least for now, as we are given to understand. Let me look at the broader markets which had started to pull up some pace, over the last couple of sessions. Both the small caps and the mid caps, they are holding up into the green, but the rally is limited, at least at this point in time. Railtel is higher among the small caps. You have Action Construction that's up. First Solutions is higher in trade. Kalpatru Power Projects is another one. You also have GE Shipping that's up. Rights is up in trade as well. KEC International is higher. Kush, any suggestion in the railway pack? What's appealing to you here?
Maybe on the downside, IRFC is something I would accumulate for the long term. I mean, railway stocks are not for the short term play. Rather, if you want to play for the next 3 to 6 months, because they start giving a quick rally just before financial budget. But this is the right time to start investing in IRFC because we have seen some base formation. Of course, we might see some correction, but a little risk with the stop loss of 120. IRFC looks good for next few months. Target on the upside is 150. So with the stop loss of just 4 rupees, we believe we can see 25 rupees upside. So risk reward is favorable at current levels.
Okay, got that. Pharma space for you, Arpit. How are you looking at that? Dr. Reddy's, Glenmark, Loris, Gland Pharma, all of them ticking a little higher. But this space has also been volatile of late. What would your choice of stocks be here?
So if we talk about the pharma as a whole, and we would definitely go with the outperformer, and that would be Loris Lab. So Loris Lab has seen a very stupendous rally in the July series, and post that August series was more of a consolidative. But the good part is that last week it has given a range breakout on the weekly scale above 880, 885 levels and trading in life high territory. So our pick would be from the pharma pack Loris. Looking the chart setup wise, definitely we can see a good 7 to 8% rally towards 935, 950 levels positionally. So Loris would be a preferred pick with stop loss around 875 for an upside move towards 950 plus levels.
Okay, got that. Kush, when we've been talking about the entire consumer demand, you've also been positive on the hospitality sector of late. Help us understand what's your fresh view here.
Definitely, if we talk about stocks, I'm very much bullish on next 5 years on hospitality segment. Starting with Lemon Trees, I mean, Lemon Tree Hotel stock is little bit not trader favorite. No one notice it. It is unnoticeable, but I think look at the move from 130. So Lemon Tree is a good stock to have in your portfolio with the stop loss of 160. Target is 240. ITC and Indian hotels are also looking good. ITC hotels. Indian hotels looking good with stop loss of 740. Target is 900. I believe Diwali is of course coming up. There are two or three basic changes in our social life which is giving boost to this segment. First, people are now come whatsoever in every holiday. People are moving out for a small holiday or 2 to 3 days getaway, and so this is giving boost to hospitality segment. Second, business travel has increased. So Lemon Tree, who caters the business sector, and it is more present in tier 2, tier 3 cities. I think it is benefiting from business travel. And third, lately, we miss out, but banquet halls. I mean, if we look at the change over last few decades, before 2 3 decades, we used to have our weddings, birthday parties at our home. Then there was a craze about open party plots. Now banquet halls have a business meetings and stuff. So that generates a good revenue monthly for these hotels. So I believe hospitality segment is not just for the leisure travel, but business travel and also for destination weddings.
Okay, fair point. I hope this has also helped all our viewers, take a view on the entire space. Arpit, what's catching your attention now? Apart from the spaces that we've discussed, anything that's come up fresh onto radar?
So as we discuss about the gold finance company, if you look at the chart set above, Muthoot Finance and Manappuram Finance, both have been a very big outperformer in the entire financial and in fact in the gold space. And look at the chart set wise, definitely Muthoot Finance and Manappuram Finance both looks very strong. And I think from here on also definitely both are in uptrend and the rally is likely to continue. So I think a bullish would be on Manappuram and Muthoot both, and definitely slowly steadily we can see a good returns of 5 to 7% upside from here on also. Though market has been consolidated within choppiness, but there's relative outperformance that is clearly seen, and that momentum is likely to continue going forward.
Okay, since we're talking about gold financing, let's also discuss with Kush as well. Kush, upcoming festive season, how are you looking at, gold and silver? They've started off the festive season on a record high note as well, both internationally and domestically. We have seen, fresh levels on both gold and silver off late. What is that likely to do to the demand at all-time high levels? And of course, how should one really play this theme, at least for now? We have seen over the last 1 to 2 years odd how gold and silver have outperformed in returns when compared to equities as an asset class.
So, if you look about consumption, I don't think consumption of gold would be picking up this season. I mean, only if there is a wedding or a certain event, people will buy jewelry at current levels. But I think gold financing company will see a good growth, because at this higher level, someone who is possessing a good amount of gold can get a loan at a lower rates than if they go for a private loan, personal loans on banking stock. So from jewelry, I don't think there would be much sales, but yes, gold financing companies will do good. If you, my view on silver and gold is, yes, we will see some more upside. Definitely, gold have hit a new high in dollar terms. But if you look at silver, Sakshi, in 2011 in dollar terms, silver was around 45. Still, we have not even breached the 2011 levels. So there is much more upside in silver from current levels in terms of dollars. So I'm very much bullish on silver, but not on jewelry segment.
Okay, fair point. I hope this has also helped all our viewers out there as well. Let me also quickly look at some of the other spaces that are moving up in trade, at least for now. Anything that's looking interesting. So we have prime focus that consistently is been in focus. Arpit, your suggestion on this one, the stock has moved up 20% over the last couple of sessions. It's holding up 6.5%, 1% equity exchange happened even today. How are you looking at this one, where marquee players have participated in the recent block deals?
So looking at the overall setup wise, definitely as rightly mentioned, we have seen a very sharp rally from 140 to almost 190 levels. And looking at the chart setup wise, on the monthly time frame, it is trading a life high territories, good 25-30% gains in this month itself. So if we come back to the previous hurdle zone, it's around 175, 177. That was the previous supply zone the stock was facing around. So I think from here on, it's better to wait for some dip around 170, 175 would be a favorable levels to add on, because this would be a kind of trying to play out a momentum stock where the risk reward is not favorable. So I think 170 to 175 would be a good entry point where you can add it with keeping stop loss of 160 for an upside move towards 200 and then 220 plus.
Okay, fair point. Let me also look at some of the other spaces. Okay, one more stock which had been in focus of late is one Quick. Kush, if you could look at that one. Over the last couple of sessions in the last 1.5 weeks, or the stock has really rallied substantially. I think 40% plus kind of a rally has already been seen. Today, there's a 3% kind of a profit taking that we are looking at onto the stock. What would you do with Quick right now?
So with MobiKwik, I would exit the stock at current levels, Sakshi, and I don't recommend this stock for a long-term bet. Definitely, it has seen some momentum, but I believe the space has too much of competition. And after hearing so much about online scams, people are getting loyal to their banking UPIs or maybe Google Pay or Phone Pay. I think MobiKwik will lose its market share over a period of time. People will get loyal to their banking apps because of scams. So MobiKwik is something I'm not attracted to for a long-term bet on new age IT stocks. So I would avoid MobiKwik, sell it, maybe invest in Eternal or Swiggy.
Okay, got that. Let me also ask, Arpit, on one more stock that has been, in focus with substantial moves over the last few days. It's Ola Electric from the EV space. The stock, after having being laggard a lot of, months and weeks from the recent times, it again came back into positive light. There were a lot of confluence of factors that led to this momentum. There was positive news flow from China on easing up of on the rare earth minerals and metals. There was PLI that also pulled up the stock higher in trade, and several other news flows that really pulled up the stock smartly up by 40 to 50% over the last couple of weeks. How are you looking at Ola Electric now? Once again, it slipped below the 60 odd mark. Do you think the near term gains have been already priced in, and now there could be some more consolidation?
Sakshi, if I look at the monthly setup of Ola, it's a very interesting price pattern we have seen since last December 2024. With almost before that, the stock was corrective phase from last August 2024 till this month, June, July or onwards. And in the particularly month of August, we've seen a very strong rally, counter rally from 45 odd levels to almost 70 levels. So I think look at the monthly setup wise, initial hurdle zone for Ola Electric was around 54, 55 levels, and now going forward, our sense would be that 54, 54, 54, 55 levels will be a major support zone for this counter, because at that junction the maximum volume has been happening in last couple of weeks, though the rally was very steep and sharp. So obviously we have seen some profit booking from higher levels towards from 70 levels. So our sense is that before the next leg of rally, the stock is likely to consolidate between 55 to 70 levels broadly. Our view will be positive till it holds above 55 levels on closing basis. Upside 62 and then 70 would be the levels to watch out for. But definitely for before the next leg of rally, there would be consolidation that is likely to continue between this range.
Okay, got that. First 15 minutes of a candle is formed, Kush. Can you help us with your insights? It's moved up about 84 points on the Nifty, 24,857 is still with us. Your suggestion of how would you look at the market?
Definitely, Nifty has hold up its opening, but look at the Bank Nifty, Shakshi, which has been discussing. It is in pressure since the opening. So maybe there would be, say, range bound momentum in Nifty, but I think Bank Nifty is seeing some pressure. So I'm waiting for 54, 350 to breach on future levels of Bank Nifty.
Okay, fair point. Got that. On the strategy on the index level, Arpit, are you doing anything on the Nifty and the Nifty Bank today on the expiry session? What exactly would your strategy be?
So a sense that as we're talking about Nifty, so we'll focus on the Nifty strategy for the expiry play. And if you look at the setup wise, some cool off is seen by the IT index because of which Nifty is holding. But as rightly mentioned, Bank Nifty is underperforming. So our focus will be on Nifty. And we, as we discussed about the range that we are looking out for Nifty is between 24,750 to 24,900 levels. And for this to play the move, the best would be to play with the simple bull call spread in Nifty, in which you would be buying 24,900 call and selling 25,000 call with a view that as upside is capped, but momentum is on the positive side. So we can deploy the strategy at net costing of around 30 to 35 points with keeping stop loss of 15 points for an upside move towards 55 to 60. So simple bull call spread can be initiated in Nifty by buying 24,900 call and selling 25,000 call for today's expiry with keeping stop loss of spot levels 24,750 for Nifty.
Okay, fair point. Let me also look at the market yet again. A lot of sectors have slipped into the red at least at this point in time. Real estate is dragging, half odd percent lower. Consumer durables, PSU banks, metals, mid caps, small caps have all slipped. You're also looking at FMCG that's dragged as well. But IT is climbing even further higher. 2% of a move on the higher end is what you see on the IT pack. Let me actually look at some of the stocks beyond Infosys as well into this basket. So Infi, Wipro, Tech Mahindra, LTI, Mindtree, you also have some of the mid-cap names like Persistent, Coforge and Infosys, Oracle Financial Services, that's also on a higher end at this point in time. Arpit, within the mid-cap IT names, are you looking at any?
Sakshi, as you see, you've seen that overall IT index, a sense was originally the setup was not that great majorly. But if you look, the one counter that is outperforming within the mid cap IT space is eClerx. So if you look at
Okay.
the chart setup of eClerx, it has been in a strong uptrend. And in spite of IT, the sector is underperforming. The stock is forming higher highs, high lows on the monthly setup. On the weekly setup, also it gives a range breakout above 4,200 levels. And on the daily scale, it's negative formation from lower highs. So I think from a risk reward wise, overall in uptrend, retesting its previous breakout zone. So eClerx would be a preferred pick within the IT pack. One can go long with keeping stop loss of 4,200 for an upside move towards 4,550, 4,600 levels.
Okay, fair point. I hope this has also given you a lot of sense there. Kush, when we look at the safe haven names in the markets apart from IT, and pharma, FMCG, you've already discussed as well. Do you think the core economy stocks also can be looked at this point in time? Say metals, oil and gas for that matter. I know these are not, impacted by the GST rationalization and what the mood is right now of the consumption space, but how are you looking at this core economy space, oil and gas, metals?
So maybe oil and gas will remain sideways. Actually, I mean, energy index is looking a little bit in pressure. If we look at it currently, it has breached yesterday's low. We are about to breach Friday's low. So energy segment, I'm a little bit skeptical at from current levels. But yes, metal stocks were looking good until yesterday. But today we are seeing some pressure. So something like Tata Steel is in focus. It's on my watch list too. I will be bullish in this stock for long term. If you want to, yes, hedge your positions on the sell side, then Tata Steel is something you should go long on. It's a low beta. You won't. There is not much downside. So with the stop loss of 160, Tata Steel is a buy. Hold it for 2 months. We may see around 190 odd levels. So definitely low beta, but I'm a little bit positive. If not downside, we may see sideways momentum. But you will protect your capital if you are invested in metal stocks as of now.
Okay, fair point. I hope this has also given you some understanding there. Arpit, coming back to you then, a lot of market breadth is seemingly getting into a negative zone at this point in time as well. Could you list out any key factors that the markets are watching out for that is preventing the markets to, probably scale to all-time highs yet again, and there is a clear resistance that's at play? What do you think will take the Nifty out of this, band?
Sakshi, first and foremost, if you look at the overall, if you go on the bigger monthly time frame charts, so where we have seen one-way rally from 2020 to 2024, the 4 years rally was when a kind of a one-way steep rally, and last September 2024, market exactly topped out around 26,200 levels, and since then, the index has been more of a consolidated between the broader range of 10% on the either side. So looking at the setup wise, definitely it's kind of a time-wise correction that we have seen, and one of the primary reason would be definitely would be the change of the derivative things that we have seen a lot of changes that has been done in the last 1 year, along with that sector rotation. So one of the two major heavyweights, if we talk about FMCG and IT, this too has been the most laggard sectors in last 6 to 8 months time frame. That has definitely put pressure on the Nifty. At the same time, if we talk about the Bank Nifty also, so Bank Nifty was relatively outperforming till July, but post then it has gone into a sideways correction. So I think one of the reason would be the derivatives. Second would be the sector rotation that is happening. Third, if we talk about the overall broader market, definitely broader market is relatively strong as sectors such as travel, tourism, new age companies, all the fintech companies that are playing out, but that is not getting reflected on the heavyweights on the Nifty and Bank Nifty. So I think a sense is that 2025 year would be more or less likely a time-wise correction and index is likely to consolidate. But the good part is that indexes form a base, very strong base around 23,500, 23,800 levels, and a sense is that positionally as we see couple of more months, the time-wise correction is likely to continue. Any fresh momentum above 25,200 closing will definitely trigger the new life highs territory. But till then, definitely time-wise correction is likely to continue with sector stock approach is going to go.
Okay, got that. All right, Kush, any trade that you'd like to take, or would you still stick on the sidelines?
Maybe a high beta trade. only for risk takers. Indigo is, of course, I'm bullish on hospitality for long term, but for short term, I believe Indigo will see some correction. So sell Indigo's future strict stop loss of 57.30. STBT first target around 56.70, and positionally 55.40. So Indigo, I'm a little bit bearish from current levels.
Okay. When we ask you, Arpit, as a suggestion for this current series, what would you really bet big on for the series?
So I would be favoring out a couple of sectors as we have been quite optimistic about the auto sector. So we have seen a vertical rally in all the autos counters. So one would be sector would be auto that was likely to outperform, and from here on also we can expect good momentum in stocks such as iShares and M&M. Second would be if you talk about the sector with gold finance that we already talk about, Muthoot Finance and Manappuram Finance looks very good. And third would be from the NBFC space that is AB Capital, L&T Finance. Both are very strong on the monthly and the weekly setup, and from here on, positionally, we can expect good 8 to 10% rally in this series. And the fourth would be from the selective healthcare and pharma pack, Loris Lab and Fortis Healthcare. So if you look at the setup wise, definitely trading at life high territories. In spite of market choppiness, they are comfortably trading at life high zones. Every dip is bought into. So three to four sectors starting with the auto, followed by the gold finance companies, then selective NBFCs, and then selective healthcare would be our sectors and the stocks to watch out for the September series.
Okay, fair point. One more stock that let's look at is Voltam Transformers, viewers. Today there's an 8 lakh shares or about 8% equity worth 618 odd crore rupees. That's exchange hands via block deals. Now, some of the reports that are already coming in are indicating that the promoter Kunjal Patel is likely to have sold up to 7.8% stake here with an offer size of $67 million with a floor price of 7,600 is what we are given to understand, at least for now. And that's keeping the stock under check. And post the stake sale, the promoter stake is likely to fall below 30 odd percent, and that's why the stock is also in focus in trading session today. I'll come to Kush here. Kush, help us understand what would you do amidst this block deal and promoter selling a large part of his stake. And therefore, remember, if the entire 7.8% stake is sold, there will be a 2-year lock-in here as well. And after that only, the promoter will be able to move forward with another kind of a move on his stake. But the stake sale could lead to promoter stake falling below 30%. How would you look at it?
So definitely, technically looking at the stock right now, I believe stock is poised to have a good correction. And promoter selling a stake is not a good sign. And if you say it is going below 30% post sell off, that is little bit worrisome for me. That means that promoter is cashing out. Maybe he's not interested in taking further from here. So maybe I won't invest fresh. Already, if I've invested said lower levels before 4 to 5 years, I'll stick to the company for next couple of quarters and see how management changes are taking place. Otherwise, avoid buying fresh. Uh, Anything below 7,000 will open gate for 5,400. So existing position stick stop loss at 7,000. Avoid fresh buying.
Okay, got that. All right. Arpit, closing comments. What exactly would you want to say before we thank you then for the day today?
So I sense is that index is likely to consolidate, and you have to be a very selective within the index bets, as we already talk about. But the real action in the stock specific action, and if we go with the right sectors, definitely we can see outperformance. So surprisingly, if we see from last 1 month, we haven't seen much gains on the index, but auto index is up by almost 10 to 15%. So it's very important to go with the right sectors: auto sector, selective NBFCs, gold finance companies, and selective pharma are the stocks to watch out for this series. And our sense that 24,750 would be a major support level for Nifty. Till it holds above that, our sense would be positive for an upside move towards 24,950 levels.
Okay, fantastic. Kush, your closing comments then?
I would recommend investors and traders to be cautious. Don't get aggressively long on the markets. Don't leverage your positions. Keep small position in short terms, and investors should hedge their portfolios with buying 25,000 put options of last Tuesday expiry of the September. If you don't want to trade, just hedge your position and sit on the sideline at least for next 1 week.
Okay, fantastic. Well, thank you both, Arpit and Kush, for being with us on the program then and for helping us really understand how to go about the markets, where exactly are the opportunities, and how to be cautious at certain stages as well. Thank you so much. Appreciate your time with us on the morning edition. Let's start wrapping up the morning show, viewers, with the markets now at 24,847. We've started off on, narrow band of a range, at least for now. Let's see how it really goes. Remember, it's the Nifty weekly contracts expiry as well. So keep an eye out on the India VIX, which currently is hovering a tad higher now at 10.8 odd levels, with some of the sectors that are that have been reacting to a lot of GST news flow. They are all seeing profits being taken off now. Autos are down, consumer durables are down, even the PSU banks and the real estate space is down in trade. IT, on the other hand, has started to pull up 2.4% higher now towards the end of the first half an hour of trade in the markets today. Media stocks are higher, pharma is up. You're seeing some broad market action also on the positive end. Private banks are holding up. You have financial services also holding up in trade. Metals, FMCG, some gains that are coming in. Top movers at the end of the first half an hour: Infosys, Wipro, Tech Mahindra. You have Dr. Reddy's and HCL Technologies up anywhere between 1.5 to 3.5% odd. On the downside, you have Eternal, Shriram Finance, M&M, NTPC, Tata Motors and Tata Consumer Products as those that are dragging in trade. 24,860. Let's see how this pans out in trade. Stay tuned with us as market coverage continues on the other side. In case you have questions about the stocks in your portfolio, you can throw them to us on our next edition of Daily Calls that starts at 12 noon. So join in for that. Two market experts will be guiding you through your stock queries.
On August 27th, as Trump's additional 25% tariffs kicked in, Indian businesses